Hey, welcome back. It's Jason Walter here. In today's housing market update, I have a lot to share with you, including an update regarding home prices, housing inventory, mortgage loan forbearances, and mortgage interest rates. And before that, if you want 2 free stocks, then click on the link below because Webull is giving away 2 free stocks valued up to $2,300 total when you deposit only $5 on their platform. So if you want 2 free stocks, then click on the link below. That promotion is running for a limited time only until July 20th, and it's for new users only. Data analytics firm Black Knight reported today that home prices through May have been increasing at their highest pace since data was first collected by Black Knight almost 60 years ago. In fact, home price growth hit its 3rd consecutive all-time high in May, with the annual rate of appreciation accelerating by more than 2% in each of the past 2 months. So May's 2.1% rise from April was the greatest single-month acceleration of home price growth in history. Black Knight had a very good visual that I want to share with you that shows how the median home price in the US for new houses and existing houses has accelerated since the late 1960s. Obviously, the last peak we had was around 2008 until the bubble popped and home prices tanked until 2011. Prices have accelerated greatly since then, but they have been rising more sharply since 2020. Another thing I wanted to point out in this graphic here is that new houses have consistently trended higher than existing homes. Just like anything, you definitely pay a premium to buy new. If you're curious how home prices will change in the next month or so, then here's what Black Knight had to say. Sales data for the first 3 weeks of June suggests further acceleration may come as median sale prices of single-family residences are up 25% year over year. This more or less coincides with what the National Association of Realtors, or NAR, actually posted today, and they announced the following. With demand outpacing supply, the median sales price of properties that sold in the past 4 weeks was 18% higher compared to 1 year ago. However, and here's good news for homebuyers out there, the pace appears to be decelerating though. In May, the median existing home sales price rose 24% on a year-over-year basis. On average, homes closed at 100.5% of the list price, and homes typically sold in 13 days. In addition, over the past 4 weeks, new contract signings, which is when the home seller accepts an offer from a home buyer, those fell 4.8% from a year ago. However, there still remains a gap between supply and demand, and this is because the year-over-year percent change of active listings, which is housing inventory, is down 31%, yet the total number of pending listings has increased by 10%. And here's good news for those looking to buy a house right now because inventory has been increasing. New listings over the past 4 weeks is now up 6.2% from a year ago. So in other words, as you can see here, new listings are now outpacing new contracts signed for the first time since April of last year. If this trend continues, then housing inventory could increase, giving potential home buyers more options. Part of the reason why our housing market may be slowing right now is due to seasonality of our real estate market, as a lot of people are going on vacation this summer, especially after last year, with a lot of people putting their vacation plans on hold due to this pandemic. And of course, another reason why we may be seeing a slight slowdown of our real estate market right now is due to record high home prices that were set for 3 months straight now. And check this out, because NAR, or the National Association of Realtors, reported that even though mortgage rates were close to 3%, the average mortgage payment skyrocketed $266 compared to a year ago. The monthly mortgage payment rose to $1,438 on average. And as you can see on this graphic here, the average mortgage payment was more or less flat from 2019 to January 2021. But it surged from about $1,100 per month to now $1,438 per month. We certainly need a large influx of housing inventory in order to move to a more balanced real estate market, right? A lot of people are saying that the mortgage loan forbearances is going to cause this big tsunami of foreclosures and inventory. So let me share the latest stats with you. As of June 27th this year, the share of homeowners in forbearances continues to decline. So for the first time since April 2020, the number of people in forbearances dropped below 2 million, and the share of forbearances decreased to 3.87%. According to the MBA, or the Mortgage Bankers Association, approximately 76% of the people who have ended their mortgage loan forbearances have entered into some sort of loss mitigation plan in place. So for example, a payment deferral or a loan modification, for example. So far, out of all the people who have ended their mortgage loan forbearances so far, only 7.5% have either done a refi or sold their houses after ending their plans. And that figure has remained more or less steady over the past several months. For example, I look back to the forbearance update from the MBA from January 5th for you, and of all the forbearance exits from June 1st through December 27th, 2020, 7.4% refied or sold their houses. In other words, this figure has not changed very much at all, and also it has not caused a flood of housing inventory. However, 15.2% exited forbearance without a loss mitigation plan in place, and that's 2 percentage points higher than the forbearance exits from June 2020 to December 2020. These homeowners who ended their forbearances should definitely reach out to the loan servicers to discuss how to pay back all their missed payments. There's a lot of options out there, especially if you have a federally backed mortgage. Otherwise, these people could become distress sales later on. And here's what NAR had to say about this. So with an average of 2.6 billion loans in forbearance during September 2020 until June 20th, 2021, that yields about 400,000 borrowers who exited without a loss mitigation plan in place. This is equivalent to only about 1 month of the current pace of existing home sales, or 483,000, and should not cause a decline of home prices. Meanwhile, homeowners are sitting on a record amount of equity. So equity has actually soared by $800 billion in the first quarter alone of this year. That's a 23% year-over-year gain, setting yet another record high of $8.1 trillion in Q1 2021. And here's a very good graphic that I wanted to share with you that shows how equity has skyrocketed ever since June of last year. The 23% increase is well above any level seen in at least the last 5 years. In addition, the rising values of home prices is also causing a lot of people who have FHA loans to refi into conventional loans, and thus getting rid of their mortgage insurance and, of course, decreasing their mortgage payments. And to give you a quick mortgage interest rate update, the average 30-year fixed rate mortgage is currently 2.9% and 2.2% for a 15-year mortgage, according to Freddie Mac. Mortgage rates are officially at 5-month lows and about 0.25% higher than the record lows of 2.75% that were set earlier this year. Don't forget to get your 2 free stocks. Check out the link below. Also, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day. Look forward to seeing you on the next video.